Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Good morning and welcome to Modern Investing Techniques, episode 73. Today is June 11th, 2026. I'm Patrick, broadcasting from Vancouver. Here's your daily market intelligence and today's practice trade. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Bank of Canada holding at 2.25% means Canadian mortgage shoppers and TFSA dividend investors face the same steady rate environment for at least another 6 weeks. The S&P 500 closed at 7,296, up 0.4%. The NASDAQ Composite closed at 25,170, down 2%. The TSX Composite closed at 34,379, up 0.7%. Early May PCE estimates point to a firm 0.4% core reading that could keep the Fed on hold longer than some expect. The Bank of Canada decision to stay at 2.25% aligns with market pricing for no move until at least July. Next week's FOMC will include the usual 2:30 p.m. press conference, giving investors a clear window to assess any shift in dot plot language. Our simulated portfolio sits at a cumulative $395 across 33 trades with a 58% win rate and 20.6% alpha versus the NASDAQ. Energy names may see continued pressure after Iranian state media threats against Elon Musk's companies in the region. Scaling into a winning trade without first closing the initial position is a disciplined way to let evidence of momentum guide position size rather than emotion. Today's market conditions reward this approach because volatility from geopolitical headlines and mixed inflation prints can produce sharp but short-lived moves that reward early confirmation. The practical method is to set a clear extension rule, such as adding only after the first tranche shows a 5% gain and volume exceeds the 20-day average. Then use the same options chain or limit order ladder already in your brokerage. This tactic has historically worked best in trending sectors during earnings season when initial beats attract follow-on institutional flow. It carries the risk of overexposure if the catalyst fades before the second tranche is added. Retail investors can implement it immediately on platforms like Questrade or Interactive Brokers by using staged limit orders tied to volume alerts. The key is treating the second entry as an extension of proven strength, not an attempt to average down. This is the exact scenario where our earlier rule about volume confirmation would have helped avoid the healthcare launch loss we reviewed yesterday. This rules-based approach pairs directly with how central bank events actually move markets. This is a simulated trade for educational purposes only. No new position opened today. We are watching for any consumer discretionary name to hold above its 50-day moving average on volume at least 1.5 times the 20-day average before considering entry. The catalyst example from DLTR's 20.11% close after raising full-year guidance showed how resilient value retail demand can produce outsized moves when volume supports the revision. Geopolitical headlines continue to drive broad volatility, so any setup without a clear volume spike risks immediate reversal. Confidence is low because we have only a single-factor technical watch without confirming volume or a fresh fundamental catalyst. By naming the exact level of the 50-day moving average plus 1.5 times volume and the specific theme of value retail, you learn to define entry rules in advance rather than reacting to price action after the fact. This prevents chasing and keeps the decision framework repeatable across market regimes. We will stay on the sidelines until those criteria are met. Yesterday, we exited the NVO position that entered at $45.39 on the first global launch of oral Wegovy outside the US. The exit came at $43.75 for a 3.61% loss. That loss came while the NASDAQ fell 2% over the same window, producing negative 1.61% alpha on the trade. The launch catalyst failed to produce follow-through once broader market volatility increased. This teaches us that a fundamental catalyst alone is not enough when volatility spikes. The lesson extracted is to require both a fundamental catalyst and a volume spike above the 20-day average before committing capital to healthcare launches. That rule now sits in our active lessons learned. The free registration for the options play scaling session gives access to a 20-minute video that walks through the exact order types and volume filters Tony Zhang uses to decide when extending exposure makes sense versus starting fresh. Canadian investors can apply the same staged limit logic inside Questrade's options chain or Wealthsimple's advanced order ticket without paying commissions. The edge comes from removing the emotional decision of whether to add now and replacing it with a rules-based checklist tied to the first tranche's performance. If today's momentum strategy interests you, this video is exactly how you would screen for setups like this. The Bank of Canada hold keeps variable rate mortgages and preferred share yields unchanged for the next 6 weeks, removing one source of near-term volatility for Canadian fixed income allocations. The action here is to hold CAD cash with no rotation signal yet. The firmer than expected 0.4% core PCE reading widens the CPI PCE wedge and raises the odds that the Fed keeps policy restrictive longer, pressuring growth stocks relative to value. The action is to trim precious metals exposure if gold closes below its 50-day moving average. Microsoft restricting Claude Fable over data concerns highlights rising enterprise caution around third-party AI tools retaining proprietary data, which could slow adoption curves for certain AI software names. The action is to avoid adding Canadian REIT exposure this week. 66% of Gen Z now saving supports long-term demand for low-cost brokerage platforms and automated investing apps that target that demographic. The action is to add XIU to the watch list for Friday close. Our simulated portfolio has completed 33 trades with a 58% win rate. Cumulative profit and loss stands at $395. Cumulative alpha versus the NASDAQ across 26 benchmarked trades is 20.6%. Average return per trade is 1.20%. Best trade reached 20.11%, while the worst reached negative 11.35%. The current streak is one loss. Our AI analysis is learning from patterns like the need for volume confirmation and adjusting future entry rules accordingly. Imagine you hold a Canadian bank ETF in your TFSA, and the Bank of Canada announces it is holding the policy rate at 2.25%, with no change to forward guidance. Your order fills at the 10 a.m. ET open, yet the ETF drifts another 0.8% lower by noon, even though the headline decision matched expectations. The mechanism is the press conference itself. Governor Macklем's tone on inflation persistence and the exact wording around data-dependent decisions often shifts the yield curve more than the rate decision. Bid-ask spreads on rate-sensitive ETFs can widen from 3 cents to 12 cents in the first 45 minutes. What most retail investors do not realize is that the 2:30 p.m. Fed press conference next week will similarly move the entire TSX financial sector, regardless of the FOMC dot plot. The Q&A reveals the committee's reaction function to incoming PCE data. The biggest mistake with central bank events is assuming the rate decision is the only tradable output. Instead, always wait for the first 30 minutes of the press conference before adding or trimming rate-sensitive positions, so you can see whether the language tightens or eases relative to the statement. Before we wrap, open your brokerage platform and pull up the 50-day moving average on one consumer discretionary name you follow. Then set a price alert for when it trades above that average on volume, at least 1.5 times the 20-day average. That's your modern investing techniques for today. Every episode makes you a sharper investor. Subscribe, leave a review, and we'll be back tomorrow with more market intelligence. And if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts covering tech, science, markets, and more. If you enjoyed today's episode, give OmniView a listen, a balanced daily world news briefing that takes every side seriously. You can explore the whole lineup at naranetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you